Let's take a look at let's analyze this now. Mr. Powell's first news conference. How did he do? Let's go to NYU professor of economics. Nicholas Economides joins us now. Nicholas, let me ask you first impression on what you thought of Mr. Powell's effort today and what he had to say.
I was happy with what he had to say. He gave a good performance. To a very large extent, he was on track, slightly more hawkish than expected. And if I would venture a prediction, there might be 4 rate hikes in 2018.
I could ask you, the markets went wild. They were up 160 points, turned negative. It was pointed out to me by Charlie Brady, our senior editor, that right around, I think it was like 247. He mentioned that they are thinking about holding more press conferences. The reason that's important is if they increase the number of times they actually go to the public and take questions, it increases the opportunities for them to raise rates. That is seen as perhaps a hawkish move. Some would say, no, it's just about more transparency. How would you read into that?
I would read it as more transparency, which I think is really good. That's what the markets want. It is conceivably a hawkish move, but I think that more press conferences are not necessary to be more hawkish. I think it's more openness, and I like that.
You like that. Let's get to some of the issues he talked about. One thing that strikes me about all of this is, yes, the economy is strengthening. Unemployment continues to fall down to 3.8%. I think at one point 3.6% by next year. And yet the outlook for inflation pretty tepid, pretty benign. How do you reconcile that?
Well, that's good news. I mean, you would like to have unemployment as low as possible and not necessarily big inflation. So that's, I think, good news for the American economy. The American economy is behaving really nice, if I can put it that way.
All right. Well, we like to hear that. Let's bring in former Richmond Fed senior economist Ward McCarthy. Ward, thanks for joining us. What was your take on Mr. Powell's effort here, and anything in there that surprised you? To me, he seemed like he was cautiously hawkish, if there's such a thing.
Well, I think that's a good description. He wants to continue to normalize policy as the economy normalizes. He doesn't want to go so fast that he knocks over the apple cart. And I think he also tried to get us to focus on the big picture rather than splitting hairs on interpreting, various aspects of the SEP. The bottom line is the Fed expects to be raising rates 3 times at least this year. They were 1 vote away from 4, and 3 times next year. But they're still going to pay a lot of attention to what happens in the economy as they make these decisions.
Yeah, it's interesting because someone said they talked about the 2020 forecast, which I guess, is a ways off. He says, look, it's very difficult to look at those forecasts with any accuracy. Don't worry about it. It's always going to be a bit foggy that far out, which I found very interesting.
Well, yes, and he also said that, keep in mind, we only made 1 policy decision today. So those dots are not set in stone. What they're trying to do is to just set a general direction, and we can work our expectations around that.
Nicholas, let me bring you back in. We'll talk about trade policy and the threat of tariffs and trade wars and what have you. He said he doesn't think that will have, Mr. Powell, that is, said it shouldn't affect the economic outlook, but he did note that among the Fed members that there is growing concern about trade policy and perhaps a trade war. What's your thoughts on that?
Well, it's very hard to predict the extent to which trading partners are going to retaliate. And I don't know if it's possible for the Fed chairman to be able to make such a prediction. And I think also, even if he had the prediction, I think it's good that he didn't say it. It's better to let this thing try to cool. Let's see what the trading partners do. And let's not predict for sure a trade war.
Yeah, Ward, let me bring you in on that. They're saying it is becoming a growing concern among the Federal Reserve members. That could have an impact on this economic outlook. What's your thought?
Well, and that's what Powell told us. He said that's not something that's within our control. We have to pay attention to it. And if we do get some developments on the trade side that adversely affect the economy, it will obviously have an effect on what the Fed does. So at this point, there really was not much more he could say on that front.
Ward, I want to follow up with something I asked Nicholas about. He was asked, Mr. Powell, about holding extra press conferences. They usually only have four of the 8 meetings that the Fed had. Do they actually go to the public? And there's talk that he may do it after every meeting, or certainly more opportunities. He said, you know what, we are thinking about that. When he said that, the market sold off because it's seen as perhaps a little more hawkish, that it gives the opportunity for the Fed, if they are going to raise rates, to go out there and explain why, because they're always out there having these press conferences. What are your thoughts on that?
Well, I think the reason that the market wiggled on that is just what you said, that it means that we give the Fed more opportunities to raise rates. But I also think that's why they have not done that yet. They do not want the market to interpret a change in the number of press conferences as being an indication of the likely number of rate hikes we're going to get. So I think before the end of the year, the Fed probably will switch from 4 per year until 2 press conference after every FOMC meeting. But just like everything else they're doing in this normalization process, they want to let the line out slow. They're not looking to stop or slow the economy, and they do not want to disrupt the financial market, so they will take it easy.